Hello and welcome to BQ Prime. I'm Hira Dadia. We have with us Mr. Rahul Mithal, Chairman and Managing Director at RITES, joining in. Welcome to the show, Rahul, and a pleasure to speak to you. Rahul, in terms of Q2 numbers, clearly pretty much in line with what the street was expecting as well. A 9% growth is what we've seen on a sequential basis on the top line. Margins have come in at around 27.5%. In terms of profitability as well, we've seen a good growth on a Q-on-Q basis. Firstly, did the numbers actually meet your internal expectations?
Yes, good afternoon. In fact, it was a real tough challenge for us and we rose to the challenge. Our export order book was low. As when the year started, we had an export order book of only 450 crores. And that was the old pre-COVID orders of Sri Lanka and Mozambique. So we knew that while all our efforts have been on in the last few months as the world travel has opened up, we are targeting 3-4 major clients to get new export of rolling stock orders. And we are sure that we should be able to get something as in the coming months. But we knew that this quarter, because of the contribution of export, would be less. So we would have to target turnkey projects for our top line. And we would have to target some key consultancy, high margin projects, which would, so that they could tackle the the bottom line and the margins, and we could do that. And because of that, you see, if you compare H1 to H1, we saw 12-13% growth in both top and bottom line. We could maintain a core EBITDA margin of 26%. So I think yes, we are happy. Our team has really rose to the challenge.
Absolutely. And the strategy of diversification has clearly helped, where one segment, if there has been some bit of pressure, the other segments have covered up. So as you mentioned about the order book as well, around 450 odd crores is what you've seen in terms of exports when we started off. Overall order book, we've closed at around 5,000 odd crores. If you could help us understand, will we maintain the same run rate, and do we see it doubling at the end of the year to 10,000 odd crores, or do you think we will be able to beat that number as well?
You see, you correctly said our order book is 5,000 crores. Out of that, about 2,400 crores is consultancy, 2,000 crores is turnkey, about 300 crores is export, and balance is leasing and others. Now, consultancy by itself, the value of each order is not very high. We get a lot of orders. In this quarter itself, we got about 70 orders. But the value of each consultancy order in itself is not very high. So we maintain this strategically, that we are a consultancy firm, and turnkey would be about 25% of our top line. So, the order book growth has to be strategically between a mix of turnkey and consultancy. So we would take turnkey orders. Recently, we got a good Bangalore Metro workshop turnkey order, which is about 250 crores for RITES. So that we would continue to keep taking turnkey orders periodically, so that we get a healthy mix of both turnkey and consultancy.
Right. So do we see the order book doubling at the end of the year in totality?
No, order book doubling, because as I said, turnkey orders only are large value. So going from 5,000 to 10,000 is not possible, because turnkey, we won't take that many orders. We want to limit our turnkey strategically to about 25% odd of our total revenue. So we take turnkey orders, but consultancy orders, we see a lot of orders coming in. We have pitched a lot of areas internationally, RITES Videsh, our initiative in the last few months. We are hopeful of getting many more orders internationally across sectors also.
Right. So Rahul, would it be right to say that in terms of the turnkey orders, these are the ones which are low margin ones, whereas the consultancy ones are high margin orders, and the strategy to limit the turnkey orders to 25% of total revenues will help us boost margins overall as well?
Yes, in fact, if you see historically, our core EBITDA margins have always been about 25%, 26%. And the threat of competition in certain areas of consultancy, whereas I see some areas where some people are bidding at unworkable margins. So we maintain a certain quality. So we try and balance between the high margin consultancy and low margin consultancy. And turnkey, as you correctly said, is in any case a low margin area. So our aim will be to maintain these margins irrespective of the heavy competition coming in. The target is to secure and keep these margins intact of about 25% core EBITDA margins.
Right. So in fact, in this quarter itself, the quantum of low margin turnkey projects, that's the share, was higher. Still, we've been able to maintain margins. So what has worked?
So that's the key thing which we worked on. We knew that this is what was going to be the plan for this quarter, and then we targeted certain high margin consultancy projects, and we said we must work on them and get us revenue in the quarter, so that these projects compensate for the high revenue turnkey areas which are low margin. So in fact, my consultancy margin, my domestic consultancy margin, has gone up from 31 to 34%. So that's why the strategy was to target the high margin consultancy areas.
Right. In fact, we've also secured a GC from Ahmedabad Metro Phase 2 and as well as an EPC for Kollam. Has that already been incorporated in the 5,000 crore order book, or that's over and above that?
Yes, both of them have been incorporated in the order book. Subsequent to that, another order which we got for about 254 crores, that was the Bangalore Metro EPC turnkey, which is post 30th September, which we have declared to the exchanges.
Right. So out of the 5,250 odd crore order book right now that we have, what's the revenue visibility that we have in terms of FY23 as well as in terms of FY24?
You see, our core, the operating revenue last year was 2,575 crores, and till now H1 we've reached about 1,210 crores on a standalone basis. So I definitely see going forward in Q3, Q4, we would maintain this H1 to H1 comparison of 12-13% growth which we have seen. We are targeting a double-digit growth, and we are hopeful of being able to achieve that.
Right. So are we saying that out of the 5,000 odd crores, another 1,200 odd crores is what, 1,200 to 1,300 odd crores is what we will be able to execution?
Yes, that's what we are targeting.
Right. And overall, if you see in terms of clearly REMC as well as RITES Africa, how has the performance been?
So RMCL is in fact been growing well. It's done on a H1 basis, done about 56 crores. Last year we did a revenue of about 90 crores. So we are definitely on a growth trajectory. We see a double-digit growth in RMCL. As the electrification in Indian Railways is increasing more, and also more and more traffic, Indian Railways is seeing a growth in both passenger and freight traffic. So the requirement of traction energy for Indian Railways has been showing an increasing trend, and that's why RMCL is also well placed to see a good growth in the coming quarters.
Right. And what about RITES Africa? I know it's a very small portion, but do you see a lot of strategy planning in terms of increasing the African business? And if yes, what percentage of the consolidated book will Africa contribute?
See, RITES Africa right now is tackling one highway project, which is in early stages. The execution has started. So in the coming quarters, I see a bigger contribution as revenue starts coming in from consultancy of that project. RITES Africa is also pitching for similar projects in the neighboring countries. So I see that to grow, but we are directly also pitching from RITES itself in a number of countries for both turnkey, both consultancy in rail infra, highways, metros in a number of countries. So but recently we got an order in Guyana for highways. So we are pitching Ghana for rail infra. So we are likely to get, as I said, RITES Videsh is a vision of our company, and I see going forward getting consultancy orders across sectors, not only in Africa, but some other Latin America as well as Southeast Asian countries.
Right. So Rahul, what's the bid book looking like for the next 5 to 6 months?
Well, we have I would not like to give a figure because it'll be speculative, but definitely considering the total order book that it stands now at 5,000. And as you correctly said, out of this, about 1,300 is likely to be executed in the coming 2 quarters. I'm quite confident that the quantum of this order book will remain at the same levels.
Okay. And apart from this, if you see exports, as you mentioned as well in the beginning, that they dipped in the second quarter, are you expecting a revival coming in the second half of the year? And do you think second half on the back of exports will be better for that segment?
You see, the balance order book of export is only 300 crores. Out of that, only 200 crores is what remains of the balance order for shipment to Sri Lanka, to Mozambique, which will definitely get over in Q3/Q4. As you said, the new orders which we are pitching for, they will have a lead time before they start maturing into revenue. So export revenue will pick up in the next FY. We are trying to make all efforts that the gap between these orders finishing and revenue coming from new orders is reduced to the minimum. So all the more again in Q3 and Q4, as we did in Q2, to tackle our top line, we will be targeting more execution of turnkey. And to secure our margins and bottom line, we would be targeting the high margin consultancy projects.
Right. And we've received $11.4 million in terms of export dues as well to SLR in November. Anything that is pending now on that front?
No, in fact, that was a very good effort by our team. 118 crores was about roughly, which was pending. Out of that, about 100 crores has come. So very marginal amounts are balanced and which will come forth. Some amounts are pending in Mozambique, which also are in a very advanced stage of recovery. So I'm sure by end of Q3, that also will come.
Okay. And overall, in terms of growth drivers, I understand it's the national infrastructure pipeline, the rail plan, increase in consultancy with regards to global demand, as well as renewable energy under REMC. These have been the growth drivers for the RITES. And in terms of clear strategy, you have embarked on operational execution, expansion of international consultancy, as well as the strategy to change the business mix in sync with the ever-changing environment. So do we see any change in strategy from here on, or we continue to do that?
You see, the biggest strength of RITES is that we do consultancy across 8 different verticals, which are, we are doing consultancy in metros. We are doing consultancy in smart cities. We are doing the comprehensive mobility plan of Chandigarh, Guwahati, Leh Ladakh logistic corridor, the Orissa logistic plan. So we will be targeting all these 8 different verticals, tunnels, bridge engineering. And the most recent initiative is RITES has we have formed a RITES sustainability vertical. So we are targeting a number of states and cities for doing consultancy in the National Clean Air Program, the Solid Waste Management Program. So that also in the coming quarters, you will see a finite revenue realization from our sustainability vertical also.
Right. And very lastly, from an investor perspective, Rahul, I'm sure you can't give me a number, but will we be able to maintain the dividend percentage that we have been maintaining in the last couple of years?
You see, with this declaration of 4.5 rupees, our cumulative dividend for this year has become 8.5, as against 17, which we did last year. We are on a healthy trajectory. We are confident that the trend projections for Q3 and Q4 are healthy. We are a capex light company. Our capex is normally in the range of 125-150 crores. So with that and the backdrop that we are a debt-free company, our growth are on a healthy track. I would like to say that we would like to aim to maintain good levels of dividend.
Absolutely. And that's what I think it seems like from the performance that we've seen so far as well. Thank you. Thank you, Rahul, so much for speaking to us at BQ Prime. Thank you. Stay safe and good luck for the coming quarters. Speak to you soon again.
Thank you so much. Thank you.